Welcome everyone to today's webinar, Traveling and Investing in Hotels with Diya Liu. Before we begin, a quick disclaimer. We are not financial advisors. All investments are subject to risk, including the possible loss of the money you invest. Perform your due diligence before making any financial decision, and of course, consult your CPA and your attorney before making any investments. So let's get into it. Diya currently owns 3 boutique hotels across Texas, Arkansas, and North Carolina, and owns over a dozen short-term rentals. She quit her 9-to-9 job, and she'll explain what exactly that means, as an attorney when she achieved financial freedom with short-term rentals, and spends her time taking over 50 trips a year, jealous, acquiring new projects that she is passionate about, and teaching others how to do the same. She speaks on stage at real estate conferences on STR, as well as hotel investing, in front of hundreds of attendees. And she currently owns a 46,000 plus member Facebook group of Airbnb hosts. Finally, Diya is creating a short-term rental and hotel series of educational courses to teach others how to invest in these assets, as well as creating a fund. And with that, Diya, do you want to give others a quick update on what you're up to these days before you launch into the presentation?
My name is Diya Liu. So I just shared with everyone in the chat where to find me, but basically it's direct.me/Diya Liu. So if you want to get a copy of these slides, if you want to find my LinkedIn, if you want to know about any upcoming events, that is the best place to find me. Today, we're going to focus on hotels because this is a commercial real estate investing group. This slide deck has a little bit about short-term rentals investing too, but we're going to try, I'm going to try my best to kind of fast forward and just highlight the most relevant pieces of those slide deck to you guys and focus on the hotel portion of it. So first, a little bit more about me, who I am, why you should listen to me. And then we're going to dive right into first STR investing, why I started with short-term rentals over other assets in residential real estate, and then why a lot of those same reasons why I really like short-term rentals led me to the natural progression towards hotels. And then we're going to talk about a couple sample deals that we have closed on already. And then we're going to talk about our personal hotel and, to a smaller extent, our short-term rental investing strategy across the USA. So once again, I was a double major in biochemistry and chemical engineering from University of Texas at Austin. I got a full ride scholarship to attend law school in New York City at Brooklyn Law. I practiced law for about 2 years in New York City before I basically decided that the 9-to-9, and yes, often I did work very, very long hours. The 9-to-9 hours were just not working out for me. And I also kind of felt like I was a cog in the machine, really. So even though I was doing really cool stuff, working with Fortune 500 companies, I just really felt like there was more to life. And so I decided to make the change and move back to Austin, Texas. I found a patent litigation job back in Austin. And I started to really go deep dive into short-term rental investing. And to fast forward a little bit, I quit my job with STR Investing just when it reached close to what I was making my first year as attorney. I was like, you know what? This matches my expenses. Peace, guys. And I decided to jump off the ledge and basically quit my job during the pandemic, which was really scary. So fast forward to nowadays, I own 3 hotels in 3 different states. I also own quite a few other short-term rentals and apartment turned short-term rentals across the USA as well. And then I also own this Airbnb professional host group. And I also speak about short-term rentals and hotel investing across the USA. So here's me most recently last month in Cincinnati on the left-hand side, and then Dallas on the right-hand side. And then really quickly, if you want more information about either of the topics, short-term rentals or hotels, you can join us on the 22nd and the 23rd. 22nd is really just a short-term rental 101 bootcamp. And then the 23rd is Hotels Investing 101. So we really try to give enough so that for someone who might even just want to listen in as a passive investor, might still find this hotel bootcamp really interesting, just so that maybe next time you're pitched a short-term rental asset to invest in, or you're pitched a hotel deal to invest in, you will be a lot more informed and ask more informed questions. And so both boot camps are open to both people who are interested in becoming active operators as well as passive investors. So moving forward, so going back to why I love short-term rentals and also why I like hotels is that they cash flow a lot more than any other assets out there. So for short-term rentals, that means that they are cash flowing at least 3 to 4x more compared to long-term rentals. And you can see here, here on the screen is basically one of my very first short-term rentals. I bought it with only about $12,000 down payment because it was a very dirt cheap ski condo, walking distance to the ski lifts. And I was able to put only 10% down on this property. So with closing costs included, it came down to about $12,000 all in. And on the left-hand side, you can see a payout of over $2,000 for, I think, 4 or 5 night stay. And so basically, a single booking on Airbnb equaled about 1/6 of my down payment. So which is really, really crazy. And then I always showed this slide because this was projection versus reality. So on the left-hand side is a screen capture from a site called AirDNA. AirDNA, for those of you guys who are not familiar with short-term rentals investing, is basically a data analytics tool to show you how much you're supposed to make in theory on Airbnb and VRBO. It pulls in data from Airbnb and VRBO booking, and it kind of helps you with the projections. So I thought I hit the jackpot when I found an asset that was going to gross 70K a year. But I only had to pay 95K for it. In fact, I only have to pay 10% and 95K for it. I was very happy. Reality is that COVID-19 happened, and I only grossed 32 grand. And I always give this example when I present both hotels and STRs, is because a lot of people ask me, hey, short-term rentals and hotels, they seem like great deals when the market's doing well. But what happens if there's another pandemic? What happens if things are not going so well? And I always give them this example because even in the worst of times in the last 100+ years, COVID-19, which was pretty devastating to the tourism industry, I still grossed 32 grand on a 95K asset. So that is not something that you're going to find with a long-term rental anywhere in this nation. And so the same strategy for what we do with short-term rentals also apply to hotels. And so we're going to talk more about how this same strategy applies to hotels down the road. But basically, we're always trying to find really, really good deals from a cash flow perspective. So we have tons of wiggle room, so to speak, in terms when there's any sort of flux in the market. And so, in fact, it was such a good time to buy during the pandemic that I was able to flip these for more than double the price of what I bought them for a year later. So when everyone was scared to buy short-term rentals, I bought as many short-term rentals as I could. And then when everyone was into short-term rentals in 2021, I decided to offload some of them to pay for hotels. So that strategy worked really well for me. And it worked so well that I was started to run into appraisal issues because people wanted my short-term rental so badly that they were willing to pay a little bit above market for it. And the reason for that is because I bought this townhouse for 255K, and I had trailing 12 months revenue of $97,000. So people people were more than willing to shell out $500K for this property. So I'm happy, the buyers are happy, they're getting a great return on a turnkey short-term rental. The only people who are not happy were lenders and appraisers, because in their eyes, it doesn't matter if my property was cash flowing and grossing about $97,000 a year. They treated it, because it was residential real estate, just like the townhouse right next door to me. So that really, really frustrated me. And I was like, I have to find a way to resolve this for future sales. And I was able to creatively resolve this one in particular because I decided to owner finance it via a wrapped note transaction. And I was able to pull 150K back out. And now I have currently a passive income about $300 a month. So I was able to resolve this, but this was the first time I was like, you know what? I need to get into commercial real estate or something to where I'm not capped by this appraisal that's based on the sales of other properties around me. And then the other strategy that I really picked up during STR investing that I really wanted to apply to hotels and other commercial assets was the BRRRR strategy, which it's buy, renovate, refinance, rent, refinance, and repeat. This strategy works pretty well for long-term rentals and short-term rentals alike. And as you'll later see, it also applies to hotels. So this duplex I bought for cash for $200K during the middle of the pandemic. I put about $100K into it in terms of furnishing and rehab, and a year and a half later, it appraised for $600K. So here it is, for those of you guys who don't believe me. So this is me, just a very Asian LLC name. And I was able to get this appraised for a little bit over $600K, and which means that there was a, minus expenses and how much it costs to furnish and rehab. There was about $250K plus tax-free gain in this property. So applying the BRRRR strategy, as well as understanding that commercial appraisals means that my appraisal is now going to be higher whenever I perform better income-wise, that I took these concepts and I decided that hotels was probably the next natural step in my progression as an investor. So this slide, so the first one is higher income and higher equals higher valuation. What really caught my attention was that not only is it you can push income higher with swing and hammer by renovating the property. This is very standard with multifamily investing. You do some selective upgrades, and then you are able to increase rents. And then now you're going to get a higher net operating income, or NOI. And then because of the higher NOI, you're able to get a much higher commercial appraised valuation. Now, with short-term rentals, multifamily, or with hotels and motels, what's interesting is that you don't actually have to swing and hammer to get a higher valuation. You could just take a mom and pop motel that is, whether it's ugly or whether it's already kind of beautiful, but it's just poorly run. It's not online. You can't find it. You can't book it as well online, and you now increase that online presence. You're improving the SEO. Let's say you're improving the digital marketing. And now all of a sudden your gross revenue is going to skyrocket. And therefore your net operating income is also going to skyrocket, which finally means that your valuation of the building is going to skyrocket, which is crazy to me. I don't have to do anything to this building. I could just market it better, and I'm going to get a higher valuation. Now you'll see in the later slides that we absolutely do still, swing hammer, so to speak. We still renovate the building. We still make it more Instagrammable, more easy to promote. But this concept really stuck with me. And the second reason why I really wanted to go into hotels was because of the scalability. It was a lot easier to acquire, of course, one hotel versus trying to buy 50 short-term rentals in 1 year. And then, of course, there's efficiencies such as getting bulk materials were much cheaper, and then furnishings were much cheaper. We're able to get at least 10 to usually 10 to 40% off a lot of these materials as well as furnishings. And then cleanings are way, way cheaper because now instead of hiring 50 different cleaning companies and or cleaners for 50 different short-term rentals, we're able to hire 2 or 3 really good cleaners to clean, let's say, a 50-room hotel. And then maintenance is also way cheaper because now management and maintenance were not shelling out 25 to 30% of gross rental income for operating our hotels anymore. And then finally, short-term rental regulations. That's often in the news, as you know, San Diego recently, for example, enacted a series of short-term rental regulations, and it's now a lot of the short-term rental operators are like, hey, what do we do? So it's usually bad news if you own short-term rentals or operate them. It's actually good news for those who are hotel and motel owners because that benefits us. So now I have some mentees who are in the San Diego area, for example, and we're looking at hotels in that area or any other area that's being regulated out in terms of short-term rentals. And we're just going to target these hospitality assets because they are carved out from short-term rental regulations by definition. So if you're scared of regulations, hotels and motels are actually safer investments than short-term rentals. And that is the final piece that really, really brought me closer to hotels and motels investing. And so I decided to start refining my target acquisitions. So I'm not looking at franchise hotels. So I'm not looking at Marriott. I'm not looking at Hilton. I'll explain why later. But we're looking at 10 and up hotel rooms or keys. And we're buying in markets 2 to 3 hours from major growth cities. So Austin, Dallas, Atlanta, Denver, etc. RTP area in North Carolina. Where are those people driving for a quick getaway for vacations? Because their primary markets are growing and booming. And so you're normally not operating these primary markets. We're operating basically where these primary markets people are vacationing on the weekends. And then we're also looking at hotel assets that we can push the valuation at least 2x. And the reason for that is because we want to give our investors a healthy return. We want to be able to pay ourselves. And also, with so many deals out there, we're very, very selective and we'll rather do 2 or 3 really good deals every single year than trying to do 10 plus just to get our volume up. And then we are also doing cash out refinancing after 2 to 5 years, around the time which is usually when we cash out our investors. Sometimes that could be way faster than 2 to 5 years, but usually that's what we project. And then, and so basically using the burst strategy for hotels is in a nutshell what we're doing. And then finally reducing overhead with as much automation technology as possible, which if time permits, I'll talk a little bit more about that later. Here's me, looking at hotels high and low across all seasons. You can see on the right hand side, this is actually the hotel we ended up buying. This is our very first hotel. It was very old and dated, but it's ours. And speaking of the same hotel, you can see another standard hotel room that doesn't have a jacuzzi in it. So we looked at a lot of deals, high and low, and I really just hated most of the deals that was on the MLS. So this is actually one that I was able to find off market, and it was referred to me by as a pocket listing, basically by a hotel broker, and so we bought it for $750K for 48 keys. Right now it's closer to 45 doors instead because we combined some of the rooms to make them bigger. And I knew that this was a solid deal because of 2 reasons. One, we were buying below market rates. I think at the time, this building, if it had somewhat semblance of decent financials, it will be, even in the state of condition, it's worth at least 1.2 to 1.3. Now, two is that we knew that these financials were not the true potential of the building. The owner was relatively old, and so they really had a lot of other commercial assets that they paid a lot more attention to. So they really didn't spend that much time to improve the online presence of this hotel. So it was only on one single OTA or online travel agency platform. Those are Expedia, hotels.com, Airbnb, those are all considered OTAs. And so he was only on one, and they also didn't really optimize it that well. So I knew that we were in for some surprises and changes when we talked to the front desk, and they said that sometimes the guests arrive before the email for the booking actually is found and located in their email system. So that's how ancient their technology is. So we got it for 150K down payment, 6% interest, 3-year balloon. And then we spent about 500K on furniture and rehab, basically, or rehab slash FF&E. And then we were not looking for refinancing for at least 3 to 5 years, but a local bank found us because he liked what he was seeing when he was driving past our building every single day on his way to work. He saw that one half of the building was shut down and being renovated, and the other half of the building had a lot of guests in it, and the parking lot on the other half of the building was full. So he reached out to us. We decided that, you know what, I don't know if we can get the full valuation and full potential of this without the 1-year financials, but why don't we try to refinance this now because the interest rates were going up. So we were surprised to find that our building was appraised for $2 million without any financials. And so this is without taking any sort of business value into account. The valuation for business is actually 0 on the appraisal report. And this is just purely on the building. And that means that there's 750K tax-free, equity gain in this property. And by tax-free, I just mean that we're going to be able to pull out a large amount of the original investment back out and do another deal elsewhere. And 100% of that will be tax-free because it's a cash out refi. And so you can see here on the right-hand side, this is the before. This is a during picture here on the bottom right. And then here's the afters with all the art added as well. So these are iPhone pictures. The next few pictures are going to be professional pictures that were most recently taken. Here's a pro picture. You can see here in this view that we have catered to the digital nomad and the traveling worker as well. With the new renovation, we have a little desk and a rolling chair here. We also have a set of patio tables and chairs because we notice a lot of our guests like to spend a lot of time outdoors in these really crusty lawn chairs that we used to have. And so we got rid of those lawn chairs. We replaced them with sleek patio furniture that's foldable. So when the weather's nice out, they can take that out and go outside and chat with their friends on them. And acacia live edge. So we really try to make it really trendy and chic, but also reflect the fact that this is a mountain town with some of the rustic touches as well. And we also added some Instagrammable spaces. This is one of those. We're still in the process of figuring out if we want to build a heated deck as well to add additional outdoor spaces. And then this is another deal that we recently acquired, so we haven't completely finished renovating it yet, but it's the Blue Ridge Mountains Hotel. This one is 19 doors, and they're more like cute little cottages and cabins are separate rather than really one large hotel building. So when we underwrote this one, in case anyone's curious how we underwrite hotels, long story short, if it's more like hotels, like the previous example, we use CoStar data. And then when it's closer to a series of short-term rentals, we will still look at CoStar data, but we will also look at AirDNA and other short-term rental data as well. So here we were looking at, hey, we're able to cash flow around half, we're able to gross about 500K on this $1.2 million asset. Year one, we're still able to operate this as is. You can see here on the bottom right, it's relatively nice already. It's not where we want it to be, but it's definitely a lot less dated than the previous example. So we're able to put about 400K into it because it's not as rough and it's fewer number of units. And then we were able to get owner financing at 700K and 5% interest. And so we are renting it out as a short-term rental hotel hybrid right now, as is. You can see the rooms are already online, basically like this on the bottom right for about $150 a night. And then we're renovating one of the single families on the property that used to be occupied by the owner's extended family into a short-term rental right now. We're also improving the common spaces to provide this really cool co-working type gym space, very similar to actually the space I'm speaking out of right now as I'm talking to you guys. And then we're also going to upgrade each unit individually slowly. On the left-hand side is a picture that one of my business partners who's living on site for the next 2 months, basically. He's kind of overseeing the rehab and stabilization of this asset. He's putting all the smart TVs in as we speak. So yeah, we are making small upgrades for now, and then really focusing on the common areas for this property. And then you can see that here is an example of our underwriting, a little sneak peek into it. We were looking at Airbnb comps here online, and basically one bedrooms and one baths. One bedroom, one baths were ranging on Airbnb, grossing around $21,000 to $52,000 a year. And so we went really conservative on that based on that range. We went on the lower end of that range at 25K a year projection. And so you can see that this is a sample return of what one of our hotel deals looks like. We're at about 22% IRR and an equity multiple about 2x. And then looking forward, we're basically starting a hotel and STR fund so that we can buy deals faster. We can pick up distressed assets, without worrying about financing, raising money, etc. The money's already raised. And then on my end, I have both this STR mastermind as well as a hotel mastermind so that I can train more hotel and STR operators and that run based on the same processes and systems. And so we're going to, a lot of our business partners are typically from tech backgrounds, actually. And my main business partner is actually, he worked 20 plus years in the tech industry. And so we really try to find a lot of ways to use smart tech to make our processes more efficient. So let me check the time. Do I still have time to go over STR and hotel strategies?
Yes, you do. You have about 26 minutes left. So
okay.
you want to go?
Okay, I'm gonna breeze through them.
10 minutes.
I'm gonna.
Yep.
Yeah. Okay, I'll breeze through these. So breezing through these. So one, we already talked about this, which is eyeballs. If people can't find you in the short-term rental or to a lesser extent in the hotel industry, they are less likely to book with you. Now, short-term rentals, this is 100% true. Hotels, more, even though you can still call in hotels to do bookings that way, more and more travelers, of course, are booking by searching online. So search engine optimization or understanding the Airbnb, VRBO, Expedia algorithms is key to really getting the max out of your investment. So what we spend a lot of our time is like a lot of tech stuff, really trying to figure out how much can we up our first page impressions relative to the market median. You can see here I'm about 3x more than my market median. And that also translated it to a larger gross revenue compared to the market median for this particular tiny little beach condo. And then two, data-backed market research. I'm always scouring websites for different tourism data, for different investment data. Where are the major tourism developments happening, or where are the natural disasters and et cetera, and what are some trends that are upcoming in the tourism industry and hospitality industry, such as the trend towards remote working is one that very many people are familiar with. And things that are less obvious are where, food delivery services are now slowly replacing in-room dining. So how do you really cater to that? Maybe you'll have a designated parking spot for Uber Eats and seamless drivers, right, when they're coming to drop off the food. And contactless check-in, that's something that more and more hotels are implementing, but that also saves on the personnel costs because now you don't have someone who has to sit at the front desk every single day. Solo traveling is becoming more and more popular. So how do we make solo travelers feel safer? And how do we provide really great common areas for solo travelers to connect with other solo travelers, as well as other people, to really have, spaces for people to share together. And then finally, Instagrammable spaces as well. And then some less sexy things to think about are, do we have king beds? Do we have queen beds? Which one's going to be a higher ROI? Should we have 2 bedrooms, or should we just keep them as studios? Should we demo any walls to make larger rentals, or should we just keep them smaller? Those are all things that we consider as part of our data. And then this
With the
one's,
market
what's up?
research, what data sources do you look at?
Oh, everything. So from Business Insider, to, just a lot of the news sources, to travel advisor and travel forums, and, travel hacking Facebook groups. I'm always looking at travel data. And also CBRE puts out quite a bit of commercial hotel data as well. AHOA, there's a lot of hotel and hospitality groups. And so AHOA, Hunter, and lodging conference, and just attending a lot of these conferences as well, really to get the most up-to-date data.
Great, thanks.
This one's probably the most important thing, is buying below market. So I've always told my mentees to buy below market, and you have a lot more exit strategies. Do not pay above market. Do not pay above, appraised value, et cetera, et cetera. So when the market's hot, everyone's a genius, right? So this one becomes more and more important as if the market cools down. So what we look at is this market sale price per key. First of all, this market is selling hotels at 60K per room. So that means if it's a 2-room hotel room, hypothetically, it should be worth on average about 120K. Now, we are always trying to find deals at least 20% below this average sales price. So it doesn't always work that way. Maybe it's super nice, it's turnkey already, it's ready to go. We're willing to play closer to market rate. But usually we are looking at least 20% below, and that gives us a lot more exit strategies. And then data revenue management, database revenue management. So we are always playing with the average daily rate and occupancy, because there's, higher ADR, I mean lower occupancy, but then higher occupancy is not always good. For example, if you're fully occupied or 80% occupied 30 days out, that might seem really cool if you don't know revenue management. But let's say you have data showing that most travelers are booking less than 7 days out, then in reality, you're really missing a bulk of your target demographic, because you have priced too low and now you're close to 80% booked, too far out from the arrival date. So that's something that you spend a lot of time, thinking about, or we spend a lot of time working on, basically. This one's also really, really important, is that if people are making decisions after 5 seconds of looking at your listing, whether it's on Airbnb, whether it's on hotels.com, then pictures matter a lot. So even though that we don't have to swing and hammer in theory to really operate better, in reality, we're able to have a much easier time marketing this if we're going to revamp the space and make it feel more like a vacation rental or hotel. And so here's some examples of stuff that I personally have designed and redesigned for either myself or one of my mentees. This one's a beach condo. This one's a ski condo. This one is in downtown Austin. This one's another ski condo here, as well as here. And then this one's on the beach. This one is as a little New Mexican retreat that I bought for $189, and then a couple months later appraised for $350. Another picture of the same residence. We do a lot of murals so that we have more Instagrammable experiences, outdoor spaces, staging something better, even if you don't rehab it, makes a huge difference. And then cut expenses. So just basically, we don't really buy franchise hotels for this reason, which takes 10 to 20% of franchise fees. We also try to ramp up direct bookings because OTAs also take somewhere around 14 to 17% fees on top of that. So not only does that eat into your cash flow, that also affects your valuation in the end, because valuation, once again, is based on how much you're cash flowing. And then vertical integration basically just means that we're trying to reduce, let's say, flooring costs from $4 a square foot to $2 a square foot, or buying furniture directly from manufacturers in Asia rather than through third parties here in the USA. And the increasing income streams. The great thing about hotels is that there's a lot more income streams. Selling snacks at the front desk could be a very high amount of income that's additional. Having a food and beverage option on site will also bring in revenue. Renting out some spaces at event spaces, that's something that we're looking at for our hotel in North Carolina. And then having additional lodging options, which is the last bullet point here. We have an extra acre in the back of our Arkansas hotel, and we are basically looking at turning them into glamping options such as tree houses, cabins, etc. And diversifying. So, starting an STR fund and basically buying across the nation, and as diversifying with hotels and STRs and different types of offerings and catering towards different kinds of travelers, you're able to diversify quite a bit. Any questions?
Yes. So we have one question. If you could get off or get on camera or get off mute and ask your question, that'd be great. So Christina, do you want to kick us off?
Sure. So my question was from probably a dozen slides ago, but you were showing, I think it was the cash on cash return, and it was like the first year was negative, and then year one was like 10,000, and then 20, and then all of a sudden year five was like 140,000 or something like that. I forget what. And can you tell us, like what happened in year five? Was that a cash out refi?
Yeah, that's a cash out refi.
Okay.
That's a return of investor capital.
Okay, cool. Thank you.
Yes. So this is based on an assumption of investing 150K, and year one, we're not at 100% operations. Then that's why year one's a little bit lower in terms of returning our investor capital. This one is already cash flowing as soon as we close on this property, but still we usually are pretty conservative in our underwriting and assuming that we're going to have to take units offline to upgrade them a little bit. We're still at $150 a night instead of, let's say, $200 to $300 a night. And so there's going to be some ramp up time.
Cool, thanks.
Great. I had a question about COVID. So you did you kind of started your spree for hotels during COVID. We're kind of not so much at the same point in time because I think we've gotten COVID manageable, but with the recession and with interest rates going up, how has that affected your business and kind of your evaluation or the underwriting of hotels as well as short-term rentals?
So I will say that hotels, this is actually one of the best times to buy hotels because a lot of hotels, their valuation went down because of COVID. So right now, the hotel valuations are artificially suppressed due to COVID-19. Now, during COVID-19, I feel like multifamily became a very hard to cash flow asset because everyone started getting into multifamily. And so the valuation, the cap rates got really condensed, suppressed to like 3-4% cap on some stuff in A markets. And meanwhile, hotels, I feel like it didn't really become overpriced, long story short, in the last 2 years, kind of like other commercial real estate assets. So we've actually had really good luck in terms of finding good deals and just being really, really selective with our deals. Now, looking forward, yes, cap rates, not cap rates, but interest rates are rising. So now, most recently, for our refinancing, we locked in 6% interest. Now, technically, the market went beyond 6%, but because the bank felt really bad that they've been delaying the refinancing, they locked us in at 6% interest. And so the interest rate for us is still around 6%. I've done 5% recently as well. It's based on the Wall Street Journal prime rate rather than the Fed's rate. So that does help a little bit with commercial real estate. And then we're just continuing to, we're probably going to see more and more deals actually pop up because people are scared they're going to sell, and they're willing to come down on prices a little bit more. They're willing to owner finance a lot more. And they're maybe willing to owner finance at even better rates than with the banks, which is what we've also seen a lot of. It's like willing to finance stuff at 4 to 5% interest, owner financing. So that's kind of what we're focusing on, is finding owner financing deals, finding distressed sellers, and underwriting our deals very, very carefully so that we're not buying above market. So if the market drops at all, we're fine if we're buying already 20% below market rates.
That's great. Thanks for that. I had a few follow-up questions regarding underwriting. One is, you obviously look at the T12, the trailing 12. Are you looking to increase rents for your hotel properties? I think we talked about this offline.
Yes. Let me stop sharing. Okay. So yes. So we are increasing, not rents per se. That's probably not the right word to use, but we are increasing our average daily rates. And that is just a factor of market. So unlike long-term rentals, there really isn't a true market rate. So you're not going to find comps. The downside is you're not going to find comps, let's say, for a treehouse. Where are you going to find comps, right? Like for a treehouse, if there's no other tree houses 100 miles radius of you, and you're going to have a fleet of tree houses built, then there's not going to be any true comps. Now you can always reference what other treehouse resorts are making. Let's say you find something 300 miles away that's making $300 a night. You're able to be like, hey, we have similar amenities. We can kind of comp this. But my point is that you actually can set your hot rate as high or low as you want. There's no real comp like long-term rentals. So if long-term rental comp is $1,400 a month, you really can't push that much higher, or lower, really. And for us, in theory, if our competitors are at $200 a night, but we have way better design, we have better customer service, we have better, customer reviews, we're able to push that to $200 plus a night. And so, yes, absolutely. We're always looking to, we're underwriting the deals based on the market median. And so we're not assuming we're going to do better. We're just going to be average C students in our projections to our investors, but we're going to aim to be like way, way better than the market average.
Right. But the Blue Ridge Mountain underwriting that you showed actually was pretty decent stats. I mean, a 20+% IRR with a 2x multiple, that's respectable. So hotel investing is certainly something that people should look into. Rob, do you want to come in on camera and talk about your question?
Sorry. Hey, how are you? I just had a quick question. With all the properties you do have, do you have any like sort of like membership rewards program whereby if they keep staying in like the different hotels that you do have, it all like they get a benefit to it, whether it be like free nights after like 100 nights or something like that?
We are starting to look into that just because so we have been so we only bought, you know, a couple hotels across the nation. So this is the start of, hey, do we want to do rewards or not? So we are looking into some sort of rewards program for our travelers because we told some of our folks who are traveling to our Ozarks hotel in Arkansas, and we told them about our new acquisition, and they're really, really excited to visit it. So they're like, okay, so now we're trying to figure out what kind of loyalty program really makes sense. Right now, we do have an informal loyalty program for those that we know are longstanding customers of a particular hotel location. So maybe we will provide, you know, we'll have a barbecue grill out, and or make, you know, popcorn for everyone who's coming for large events. But right now, we don't have a formalized loyalty program yet. For the STR and Hotel fund, on the investor side, not on the traveler side, we're looking at actually adding travel perks for our investors so that conceptually speaking, if someone is already going to Disney World every single year and they're spending 10 grand on their Disney vacation, now instead of paying for that lodging, now let's say that stay is free or discounted. So now instead of spending that money, they can just invest that money with us, and they save a lot of money from lodging, but also their travel expenses are now tax deductible because they're business expenses because they're traveling to a property that they own a percentage of. And so we're looking at how we can make that work and still provide a really good cash flow for everyone. So we don't have details for that yet, but that's not exactly what you're asking about, but that actually jotted my memory about that perk that's coming up.
Thank you.
You talked about revenue management, and I wonder, you know, that's easier done for short-term rentals. For hotels, is that also similarly easy to do? I'm thinking, you know, if I think about the standard big box hotels, you know, you see, you know, yes, there's seasonality in terms of the rates, but they're not adjusting the rates constantly. Not as a, you know, perceiving it from outside. What's your take on that? What's the strategy around revenue management for hotels?
It's actually the same for us between short-term rentals and hotels. Now, I don't have insight into Hilton or Marriott and what their revenue management tools are and dynamic pricing tools are, but what we use for dynamic pricing for our short-term rentals as well as our hotels are very much similar. So we use cloud beds for our hotels. It's basically helping us manage all the different channels between Airbnb, VRBO, Expedia, etc. But it also has its own dynamic pricing software. So right now we're in talks with actually the tech lead and the CEO and etc. to be like, hey, we really want this other brand to be your dynamic pricing tool instead of your house brand for a dynamic pricing tool. And that's where my partner's tech background is coming into play. He's actually the one day to day talking to our, you know, all these different tech companies to make sure that we're getting the best revenue management tool possible. So
That's
yeah,
great.
we still have the same tools. Long story short.
Got it. Okay. How are you sourcing the hotel? opportunities? You talked about brokers, you talked about MLS. What have you found as successful versus maybe not as successful?
I will say that most hotel deals are that are good are probably going to be off market. Not always, but usually because one, there's a saying with commercial real estate that by the time it gets to the market, it's probably passed down. It's probably like, no, that's not a right deal for me. And by at least 10 different groups that looked at this deal. That's how it reached the market because a lot of folks will present it off market first to see if there's any interest. The other thing is that hotels are businesses. Unlike a lot of other real estate, there's a lot of staff involved. So if imagine you're working at a place and you found on Crexy or LoopNet that your business is for sale and this is your livelihood, right? So what are you going to do? You're probably going to start looking for other jobs. So sometimes hotels take forever to sell. If I was a hotel owner, I probably would not list it on the MLS because I don't want my employees to all quit on me. So a lot of hotel brokers tend to have one hotel deal on the MLS and then they'll have at least 5 in their back pocket that they can talk about if you call them. So one strategy is to call hotel brokers. Another one is to call to be on the top of the list with wholesalers in your area of interest. A lot of them hate hotels because they don't know how to underwrite them. They don't know how to wholesale them. They don't have a lot of buyers for them. But if they know that you are a really strong buyer, maybe they will bring this deal to you first. And then we also do our own off-market campaigns as well. I will say that the most recent acquisition was listed on Zillow as a single family that has 0 rooms and very, very large. And so sometimes there's no hard and fast rule for it. You just have to be lucky or you have to be addicted to looking at real estate like I am because I'm always on my phone basically looking at real estate at all hours of the day.
That's great. What are your target avatars? So for the LP and maybe just for GPs as well, who would be interested in hotels and as a LP, limited partner investor of your funds or any of your syndications?
So our LPs, so for our GPs, starting off with our hotels, we only really partner with people we really know. So I get a lot of messages, hey, let's partner on the deal. I don't know what I'm doing. I'm like, that sounds horrible. Why would I partner? So we only partner with people we know, whether it's that's out of our mastermind. So I know they know the basic materials and I know that we can work well together because I've seen them in person. That's how I've vetted them. And they all have short-term rentals already. So I can go and visit their short-term rentals. I can visit their Airbnb listings and see what level of operator they are. Are they the kind that's just scraping by, or are they the kind that really tries to provide a really good guest experience? So there's already some sort of resume that comes with, the people that I partner with. Now on the LP side, a lot of them are often short-term rental investors already as well. They understand ADR, they understand RevPAR, which is revenue per available room. They understand occupancy and seasonality. Now they are interested in hotel investing, but they just don't have the time or they don't have the expertise. And maybe they'll want to maybe lend a hand on hotel stuff that we're doing at the hotel, maybe setting up furniture or whatever, some minor role. So they get a little more hands-on with hotel, running a hotel basically. So that's one type. The secondary type is people who are looking for maybe a little bit higher cash flow as well, because hotels and STRs, they do cash more. And then finally, because of the STR fund, as well as our most recent hotel purchase, we have started rolling out travel perks. So people who naturally love to travel anyway, this is something that will not just cash flow for them, but also provide a lifestyle for their families as well. So, if you don't just care about, cash flow, you also care about, providing experiences for your family. This STR Hotel Fund, for example, should be able to offer both.
That's great. Yeah, that's me. I am definitely interested in traveling. Um, so I guess like a parent who have uh, children that you are, probably one job is better than the other, but STR versus hotel, which one in your mind is a better investment, and which one do you like working with more?
So, as in for you or for me?
For you.
Okay. I like both. I like short-term rentals in that they are, residential real estate is a little bit easier to offload than commercial real estate in general. And hotels are, so short-term rentals are liquid. So I am able to sell if I need cash flow, if I need quick cash for another project, and I can always sell one of my turnkey SCRs relatively quickly. Even in this current market, I know that I can do that. Now, hotels is not the same, right? Like I can't just sell one tomorrow. And so that's one pro with short-term rentals. But the con with short-term rentals is that there's no economy of scale. So what ideally I like to have is always, even for me, without talking about the fund, just for me personally, I will always like to own both. So I will have short-term rentals to where I have the flexibility of having quick infusions of cash. If I want to sell something, I can 1031 that very relatively quickly and easily. And hotels, a lot of times the single family next to a hotel is going to be worth 600K, and the hotel will cost, and it's 10 units and up, and it could cost only just $1 million or so. So in terms of pure cash flow perspective, hotels is probably going to win. And also, it's going to be more resistant to SCR regulations and et cetera. And so there's really pros and cons of both. And then also, if I was not talking about me, I was just talking about a hypothetical person, sometimes for them, it's a lot easier for them to just buy one or two short-term rentals and have a little more cash flow, but also a little more, lifestyle asset for themselves and their families to use. So a lot of my clients are actually folks who are not necessarily just looking at the cash flow aspect, but they're like, I want a house, I want a townhouse next to Disney, or I want a townhouse beachfront so my family can enjoy it, or I want a ski condo that I can go during the summer and then folks can rent it out during the winter. So it's also a lifestyle asset for people to own short-term rentals. And so it's not a one size fits all. For me, I will always own both.
That's great. As a parent, you love all your children. That's a great answer. So we are at time. Do you want to leave any parting thoughts, and as well as your contact information? I know you left your email or your web address. Any parting thoughts?
Yeah, so I relinked it again. So that's a one-stop shop for all things related to me and my upcoming masterminds and meetings and opportunity, any sort of opportunities. So I would say that the time to buy for me personally, and hopefully for you guys, whether it's residential real estate, commercial real estate, any sort of real estate, is now, as long as you find the right deal. I know a lot of people are uncertain with this upcoming market and what we're doing, but if your money's sitting in the bank, it's still losing out to inflation. So I always think that buying a real estate, maybe I'm biased. It doesn't matter what kind of real estate you're buying, but find your favorite asset class and just go invest now, as long as you're underwriting the deal very carefully.
Great parting thoughts. Thanks, Diya, for your presentation today and for the great information you've imparted. For everyone else, we are recording this, so this would be available for replay in just a few days. And again, thank you very much. You have your contact information for Diya. If you want to find out more information about short-term rentals, about hotels, about her fund, by all means, do reach out to her. And thank you very much. Have a great day, everyone. Bye-bye.